what is maybe the number one thing that people need to look out from a audit side?
Well, the biggest risk with the audit is that you need to, first of all, report all your income. And there's a lot of services. I know you had the guys from CoinTracker on here. Sheehan, great guy, great product. There's about a dozen products out there that all generate your capital gains report, but you need to report your income. And far too many people are focused on how do I avoid taxes? And believe me, I've had some staggering tax bills in my own personal life. Okay. So, but I will say this, rather than focusing on the 20 to 40% that the government wants to take, you should also focus on the 60 to 80% that you're keeping, and, focus on that, and getting to zero tax makes for great articles, but 15% tax is really good. So the biggest concerns that people have are in this space. This year, there's a new question on the IRS on the 1040 tax return. Right after your address, how much you made at your job is, did you receive, send, sell, or have any financial interest in cryptocurrencies? This question terrifies everybody. But guess what? That's why they put it there, to scare everybody. The IRS is having real struggles of making compliance. So a big aspect of what the IRS does to increase compliance by taxpayers is to scare them. And that question is doing it. My particular feeling is that 75 to 90% of all taxpayers should check yes.
If they participate in crypto in whatever manner, they should check the box.
Well, everybody should check yes. It doesn't say cryptocurrency; it says virtual currency. We don't do this too much anymore, but airline frequent flyer miles are a form of virtual currency because they're convertible into cash. Same thing with your credit card reward points. You go down to the Safeway and use your Safeway card, and you get a pan at the end of the year because you converted your points into dollars. That is virtual currency. So everybody should be checking yes. If you own a credit card, if you have virtual currencies or frequent flyer, you should check yes. This question is intended to be a fraud trap, a perjury trap. Somebody's going to be scared because for whatever reasons, maybe they didn't report correctly in previous years. So they check no. And so then if in fact you did say yes, you've committed fraud, because when you sign your tax return, it says under penalty of perjury, I have read this return and the statements and it's complete, true and accurate. So when you check no, you've committed fraud if in fact you did try to do with cryptocurrencies, and you lose your statute of limitations protection for that entire year.
So what are some other
check yes. Check yes. There's no upside. No.
Check the box yes if you're involved, and that'll help. Also that will help with maybe an audit too, correct? Because obviously they might be. Are they really getting some data from Coinbase and these other exchanges?
Yes, the IRS is right now. I'm defending 19 taxpayers who are being audited by the IRS on their crypto reporting. They've come to me. This is a big aspect of our practice at Crypto Tax Audit, and the IRS has used a couple methods to identify taxpayers. First of all, if you submit an amended tax return, all amended returns are looked at by somebody. And if they start seeing Bitcoin, that sort of stuff, it immediately goes over to the examination department. And your likelihood of getting audited is 5 to 10 times greater than if you initially file a tax return electronically. So amended returns. The second thing is if you got a 1099-K form from Coinbase or Uphold or any of those other exchanges, your likelihood of being audited is big. I got about 5 people being audited on that. Of course, they did this in 2018. Everybody lost money in 2018. But these 1099s say things like, this guy made $4 million. I'm talking to an auditor right now. She goes, I want that. He didn't report $4 million. So we revised this tax calculation. He said, no, he actually lost $17,000 and we want a refund. And so, now they're backpedaling because auditors are measured on how much money they bring in each month in terms of taxes, penalties, and interest. So, she picked this tax return. She thought, $3 million unreported. I'm going to make a killing. Now, all of a sudden, we're into refund mode. She's back. She's losing money on her entertainment for the month, so this is what happens. So yeah, the 1099 case. And what's really interesting right now is you probably heard about the John Doe summons that went out to Kraken and Poloniex /Circle, right? and they're demanding records on American crypto traders going back to 2017. So this is really, I find, shocking because they did this to Coinbase, and Coinbase ponied up money and started issuing 1099Ks regularly for every year since then, except last year. But the IRS has not come out with 1099 standards for cryptocurrency exchanges. So now what they're doing is they're simply suing these guys to get all their data. They can get more data suing than they can developing a standard reporting format. So I hope the courts, I wish the courts push back on this. Kraken and Poloniex have said that they're just going to go along and, respond and be helpful. But I don't think it's a good strategy. So this is going to be another source of information. So they're going to find out from those two exchanges, and this is going to scare all the other US exchanges to start to pony up data. So if you didn't file your 1099, if you got a 1099, or if you were an active trader in those other exchanges, you're exposed in past years. I think they're going to continue to ramp it up.
Well, how does the, a lot of people are using the exchanges as like a fiat on ramp or off ramp, right? So they might buy something there and then they send it to a wallet off the exchange, and then they're doing transactions there, and then they might, send something back to the exchange and sell it. So how can they properly track those 1099 statements if they're, not all being done on the exchange?
Well, it's totally misleading. I mean, it's totally misleading. I mean, like Coinbase was, okay, you deposited, money came in. All right, that's something we're going to report. Money went out. That's something we're going to report. I sold something. Well, the total proceeds will report that. So it's easy to get these astronomical 1099K numbers. But what the 1099K doesn't show is it reports any wallet-to-wallet transfers as proceeds. Okay, so it's reporting that, even though it's just a wallet-to-wallet transfer. Coinbase doesn't know what that other wallet address is, so it takes a worst-case scenario. Secondly, it's reporting the proceeds of a sale, but not the cost of the coin underneath it. Well, and to Coinbase's, defense, they may not know. You might have bought that coin on another exchange, you transferred it, and now you sold it. They don't know what the cost is. So this. You basically get these enormous numbers. And if you're a high frequency trader, you could create staggeringly high numbers with just a little bit of money. It gets the IRS excited. And the best thing you can do is in your tax return is you want to use the software to report the fact that you did a 1099, that you got a 1099K. Because the tax software, even though your tax return may not list it, it's in the software when it's electronically transmitted. And the IRS has a program called the Underreporter application. It looks to make sure that all the 1099s they were told about have been accounted for in your tax return. So even though it's a ridiculous number, you need to report it. And depending upon the tax software, you can tag it as not relevant or some other ways. But the worst thing you do is not list it in your tax software when you do the filing, because then you're just going to get an audit later.
So besides, making the election on the tax return and filing your taxes, I mean, what other steps can people take to prevent an audit or be in compliance? And maybe what software, do you prefer to use? Well,
yes, you should use they call themselves tax softwares, but they're not. They're just gain calculation software. CoinTracker, CoinTracking, Accounting. These are all great products out there. There's about a dozen of them. So you want to use those tools. Those tools will not defend you in an audit. That's very important to know. They are not, if you get it audited, they're going to say good luck because you did the work yourself, right? These are do-it-yourself tools. So if we have our own company, we do calculation for our clients and we stand behind it. Second thing you can do is, and this is probably the most powerful thing you could do to protect yourself as a trader from an audit, is the simple fact of using a pen in a spiral notebook, all right? And every time you trade, write down the date and what you did. I moved 10 ETH over to Uniswap and bought, Chainlink. Just write it down. Don't get precise. You're not going to be, but write it down. This is called a contemporaneous log. If you write it when it happens, and the courts put tremendous value on that. Now, why is that important? Well, particularly, it tracks what happens. It explains what you did. If I moved one Bitcoin from Coinbase to KuCoin, Coinbase is not going to know that it went to KuCoin. only your written record is going to say that. Okay. So, and I can give you a horror story, that one audit that's gone bad because the guy hadn't done this. So just write everything that happened. This contemporaneous log has to be done as it happens. Don't do it on an Excel spreadsheet, because it's the fact that it has your handwriting, the ink is changing, the handwriting's changing, and that it's done real time is tremendously powerful in an audit into court. And the third thing you can do is we have a service at cryptotaxaudit.com that nobody else has, and it's revolutionary, where it's a monthly membership service. It's $35 a month, but we monitor your IRS accounts on a weekly basis, and we can see when the IRS has flagged one of your tax returns for an audit. It could be crypto related, it could be non-crypto related, whatever. If we see that flag, then we notify you right away. And on average, there's 6 months between when a flag is raised and an audit begins. And that gives us a chance to look at the return, fix whatever's lacking, refile it before the audit begins. And you can avoid the 20 to 40% accuracy penalty plus interest. So this is what a lot of people are saying, hey, look, I'm not going to fix my past returns because I know it's going to attract an audit. So I'm just going to watch. And once I know the IRS is coming after me, then I will file it. I will file the return then. So why throw good money after bad is what a lot of people are thinking. So this is a powerful tool. There's no other tool like this in the US.